Hello everyone, welcome to my channel Insurance Info. If you are interested in insurance and if you want to know about insurance, then you are on right channel. Today I am going to discuss with you rules and regulation and supervision in OECD area, Asian countries and economies in transition. So if you are interested in this topic, I request you to completely watch this video without missing single step to get complete overview of this issue. And if you have not subscribed to my channel, then please do subscribe my channel and press the bell icon to get my latest videos. Number 1 is Organization of Insurance Regulation and Supervision. All countries of 3 regions studied: OECD member countries, Asian countries and the economies in transition report the existence of insurance regulatory and supervisory authorities. Number 1 is Regulatory Authority. In OECD member countries, the regulatory authority usually is a part of or is directly accountable to a ministry. In many cases of finance or economy, in several OECD countries, however, the insurance authority is a department of another ministry, as for example Industry and Trade, Ireland, Italy, the United Kingdom and United States, Social Affairs, Finland and Development, Greece. Similar in the majority of Asian countries, Brunei, Indonesia, Laos, Philippines, Sri Lanka, Chinese Taipei, Thailand and Vietnam, a department within the Ministry of Finance is responsible for regulation. In 3 Asian countries, a central bank is responsible for regulation of all financial businesses, including insurance business. In Macau, the Monetary and Foreign Exchange Authority. In Malaysia, the Bank Negara of Malaysia, and in Singapore, the Monetary Authority of Singapore, to be seen as a de facto central bank. Even in economies in transition, the Ministry of Finance is the competent authority for insurance regulation. Supervisory Authority or Supervisory Authority. In some countries, the Supervisory Authority is a part of Ministry of Finance, while in other it is another administrative body, in many cases subordinate to that ministry. Most of the OECD countries have an independent supervisory authority, exceptions being the Czech Republic, Japan, Turkey and United Kingdom. In Asia, only Hong Kong's Insurance Supervisory Authority, the Office of Commissioner of Insurance, is independent of the government and therefore comparable to supervisory authorities in continental Europe. In other Asian countries, the department within the ministry is responsible for regulation, respectively. In Macau, Malaysia and Singapore, the central bank is responsible. A few of the economies in transition, e.g. Albania, Bulgaria, Croatia and Ukraine, have an independent authority, although the term independent is little ambiguous here. For example, in Albania, the supervisory authority is independent, but its members are drawn from the finance ministry. Financing. In principle, in the OECD countries, the supervisory authority is financed by insurers' contribution. In 4 countries, Germany, Korea, Mexico, Poland and United Kingdom, supervision is co-financed by the state and insurance industry. Only in Spain the body is financed solely by the state. In Asia, with the exception of Hong Kong and of Macau, Singapore and Malaysia, where the supervisory authority is a central bank and self-funding, insurance supervision is still financed entirely by the national budget. The same is true for the economies in transition with the exception of Croatia and Slovenia, where the supervision is co-financed by the state and insurance industry, and Albania and Estonia, Lithuania and Latvia, where the supervisors are financed by the industry. Workforce. The number of persons employed in insurance supervision depends on the size of the country and the number of insurance companies operating there. In OECD area, the supervision workforce varies widely across countries, ranging from around 10 employees in Czech Republic to over 400 in Mexico. In Asia, the range is from 10 to 50%, except in Thailand, where the workforce is over 500. In the economies in transition, the number of employees working for the supervisory authorities is still relatively low, about 20 on average, except in Russia, where there are more than 200. Next is regulation and supervision of direct insurance. In all the countries studied, insurance companies are subjected to regulation and supervision. Direct insurance company in all countries first have to apply for a license in order to operate. The license is usually issued by the competent supervisory authority. In some OECD member countries, the competent authority is the ministry, at least for licensing foreign companies, where in several countries there are independent administrative bodies. In all Asian countries except Brunei, until the introduction of insurance regulation, for the time being the Ministry of Finance has to approve the establishment. The establishment of insurance companies is subject to a license granted by the insurance supervisory authorities. This was all about regulation and supervision relative to insurance. Now I will give you a general overview of all this. We have studied about organization of insurance regulation and supervision. It includes regulatory authority, supervisory authority, and it also includes financing. It also includes workforce. Now one by one I will try to explain you what is this regulatory authority. Regulatory authority means the authority who will regulate the policies regarding insurance. For example, if your insurance company tell you that they want you to deposit the premium for 10 years and after that, and they are only totally remain unchecked how long they demand you to pay the premium, it will be difficult for you to get insured. For that reason, there are regulatory authorities which regulate the policies of insurance. For example, they check and balance on insurance company that they provide insurance policies that will be favorable for insurer to get insured, so that more people will get insured with ease. And then is supervisory authority. Supervisory authority supervise the insurance companies if they keep check and balance on insurance company that if they are working in accordance with the rules and regulation that are set by regulatory authority. If any of the insurance company are not following that rule, then supervisory authority will report this to regulatory authority to take action accordingly. Then next is financing. Financing means that there are few organizations that collect amount just like taxes and just like charges from all insurance companies, and they also provide finances to insurance companies to facilitate them. Then is workforce. Workforce is the number of person working in any of the insurance company its employees. It can be 10, it can be 20, 30, 40, 50, or whatever it can exceed even to 400, 500. How big your company is, how big your insurance company is, it will depend on this. So this was all about regulation, rules and regulation, supervisory authorities and regulatory authorities on insurance. I hope that you have understood this video, and I hope to see you in my next videos. Thanks for watching. Goodbye.